Good morning. My name is Thibaut de Barcy. I'm the Vice Chairman of the Payments Association EU, based in Luxembourg. And today we'll have a great conversation about the future of payments in Europe with Marion King. Good morning, Marion.
Good morning, Thibaut.
Marion, you are head of payments at the famous bank NatWest, but most importantly for me, you are the chair of the advisory board of the Payments Association in London, our sister association. So I think we are a perfect example of a bridge between the UK and the EU, and that's why we have this conversation today. Now, about payments, our industry is just fantastic, so many things happening. But today we have selected 4 topics which we think will be the driver of or points of attention for the future of payments in Europe. And I think you would agree that the 2 most important ones are how is open banking going to evolve, both in the UK and in the EU, and then we'll switch to instant payments, which are the 2 main driving forces. And what's interesting, of course, is that the UK was very much in advance on those 2 topics versus the rest of the EU. So you are in a prime position to tell us what is the current situation in the UK, and then I will reflect with what was happening in the EU. But maybe let's start with open banking, Marion. I know there has been a lot of discussions, review, Khalifa review, etc. Regulators want to know what's happening. Tell us more.
So open banking, I think, Thibaut, has been a catalyst for change in the UK. And I'm passionate that it's really that change within that regulated framework and with that collaboration across all of the major players that will get growth and innovation in the payments industry. And I think the experience in the UK has been it takes time. You know, we've heard the naysayers, this will never work, but it does take time. And I think what we're seeing now is that real growth taking off. We had 26.6 million payments made by the end of last year, and 4 days ago, the numbers were 5 million regular open banking users. And we're seeing about 1 million going on every 6 months. So we're now starting to see the use and the realization of the advantages and the benefits of open banking really taken off. And Her Majesty's government, HMRC, allowed open banking for the collection and remittance of payments, and they've now transacted over 2.5 billion. So there's no doubt that this is here to stay, and there's no doubt that this is a real driver for change. We've seen that in Australia with MPP, with a mandated payment service to enable third parties to access customers' information and accounts with their permission. And I think what it's doing in the banking sector is making us really stop and think about models, business models, revenue models. Think about those traditional profit lines for banks, such as overdrafts. Well, with open banking, fintechs can provide capability for your accounts to be scanned and for an automatic shift of money to avoid you going overdraft in any particular account. So in essence, and in theory, could remove that revenue line for banks. And so that's really driving change and benefit to consumers, which I think is great.
And on the European side, as you might know, PSD2 is about to get reviewed, and this effort will be led by the European Banking Authority in cooperation with the European Commission. So yeah, there's a lot, obviously a lot of new players are not entirely happy about the way it has been implemented. We have issue, of course, in terms of API standardization. Of course, at the scale of the UK, maybe it's more easy to have a better standardization. But here, of course, we have different approaches in different countries with strong players that emerge, that position themselves as open banking platform. But yeah, the situation is not completely satisfactory. I guess you experience the same, right?
Yeah, and clearly it's a lot harder to do, cross countries with different standards, different approaches, and different views on how this should work. But what's driven it for the UK, I think, was the Competition and Markets Authority mandating that this had to be done. with the larger banks within a framework which we all agreed on to get that API standardization. And not just standardization, but the quality of the APIs to make sure they function in the way that we anticipated, and lots of testing between partners as well, or parties. So you have to have a framework, whether it's for one country or for multiple countries, but clearly the more stakeholders you have, the more challenging it becomes. And we've probably seen that with what's happening with EPI. It is difficult to bring multiple parties together. So that framework is important. But if I reflect, Thibaut, I think also what was challenging for the UK is I think not enough thought or time or investment was made on the end use case. What does this mean to our customers? How might they use it? Bring it to life, such as the example I've just given. And then perhaps some sort of joint marketing, not selling product, but really promoting the advantages and the benefits of what this can mean for customers.
Talking about end users, another big topic which is dear to the heart of the consumers, and obviously now the European Commission, it's instant payments. We have a common standard. Instant payment is offered throughout Europe, but according to very different access conditions, actually, at different prices. And we know that our Commissioner, Mairead McGuinness, is not happy at all about that. So she's probably preparing some piece of legislation so that we have a common framework on instant payments. Now, here again, I mean, the UK was pretty much ahead in terms of getting it available for everyone. So what's the situation now? Is it everywhere? Is it free? How does it work?
Yeah, so Faster Payments was launched in the UK because I was running Vocalink when it was launched, so I remember the day well, in 2008. So we're now talking 14 years ago. And I think it would be true to say that the UK economy, UK consumers of payments can't imagine life without being able to move money in real time. Yeah. It just has so many benefits that it's a very important thing to drive. That being said, 14 years on, we're now looking at the next generation of real-time payments with a renewed payments architecture for faster payments, in parallel with a renewed architecture for real-time gross settlement, and looking at the liquidity management between in real time, because this brings huge advantages. But so very successful, widely used, essential to the economy is how it is now viewed. However, and I take this quite personally because I launched the product.
That's why you're here.
What we saw 10 years after launch was scamming, convincing end users to move their money in real time to a fraudulent account for a fraudulent purpose.
Yes.
And of course, it's what we call an irrevocable payment. It's gone. And so the recovery of that is incredibly difficult. And it's been a huge issue in the UK. And we're not shying away from it, but we need to do better. And we need to make sure that within that architecture and within the design of the scheme, we really sharpen our focus on protecting end customers, to think and put in the technical changes that we can make to protect customers from this fraudulent activity. And it's difficult because the bank isn't involved at the time that the fraud is committed. It's only the execution of the payment that we can try and pick it up, such as we've done with confirmation of payee. So a big learning, I think, for other countries that are moving in that direction is, learn from the challenges that we've experienced in the UK.
One other underlying aspect, and it's mixing both actually open banking and instant payments, is how liquidity should be improved for companies, for banks, for payment operators. And it's not only about technology, it's also about the requirements that are imposed by the central banks, by the different parties, part of our system. I know it's a topic that is dear to your heart.
Yeah, it's complicated, but global liquidity is really about ease of access to finance. And you spoke a little bit about putting a pricing framework across Europe because you have differences between the countries. And I think that's really important. And whilst consumer banking is free in the UK, so to end consumers in retail banking, a faster payment is free, what I think we spent not enough of time on is the economics of this. How is this sustainable?
Yes.
You know, large technical infrastructures need funding and they need financing. And if you have free services, that becomes quite challenging.
Absolutely.
And the risk is that you shortchange or underinvest in our ecosystem. So I think it's absolutely right that the economics of the model are there right up front in that design, not just a mandatory requirement to build something. You have to think through how the economics flow. And so if you think about all the different schemes we have, and I think of them as silos, with liquidity management being managed in each one, well, if you step back and look at that at a holistic level and think about it cross-border as well,
yes.
And the efficiencies that you could create through real-time management, real-time insights, which can assist with monetary policy and other things, you start to save money. And so the economics isn't just what you can or can't charge, it's how do you drive efficiencies in that ecosystem. And for me, liquidity management is a key area where we can do so much better and sort of release some value in the value chain of managing money flows.
Absolutely, completely agree with you on that. One particular aspect before we move on to our last subject, which is going to be CBDC, is the SEPA access. Now, of course, as a result of Brexit, I mean, are there worries really, Marion, about that access to SEPA system from the UK banks?
Yeah, I don't think they're urgent worries. I think what we have to watch, though, is the passage of time. There's no doubt that SEPA has brought substantial benefits for Europe and including the UK. And, we transact about €1 trillion between the UK and the EU. So this is really huge money flows. And that access is an ease of access, and that consistency is a key conduit for trade. And that will apply, that applies in a post-Brexit world more than before, probably. But I think that what we need to watch over time is the inevitable changes that will happen. And we have to ensure that parity of functionality is constantly aligned. So if there are changes to the SEPA geographical scope, the SEPA approach, the SEPA rules, we have to make sure that the UK is on board with that and we make the changes and stay with it. Because what I've seen through my sort of long experience now in the payments industry is things can erode after time, and then the ease of flow and consistency for customers starts to break down. So I think the worry is that we don't keep that alignment and we don't have a framework to ensure that happens. And if we look at PSD2 and if we look at GDPR, European frameworks from which the UK has benefited hugely in terms of that consistency of standard and that drive for implementation.
Absolutely. Now, our last topic, which is a fantastic subject matter, is of course CBDC. So as you know, the European Central Bank, they have their digital euro project. It's a project. It's not an official decision to launch it. There are many questions about it. How will the digital euro will be distributed? What will be the role of the banks? Will it be accessible to non-banks, to the other payment operators? Will there be a cap on the amount of digital euro that European citizens will possess? There was an amount mentioned of 3,000 euros. So what can you do with 3,000 euros? Anyway, I heard that in the UK there was a quite negative paper coming from the Parliament, if I'm not wrong. And on the other hand, there is a fantastic new initiative just launched by the Payments Association. Tell us more, Marion.
Yeah, so this is a great subject. Personally, my personal view is digital currencies are going to really take off, and we're going to see that growth. Think of digital currency alongside open banking, alongside global frameworks, and you start to see seismic shift in the flow of money and transactions around the globe, which I think is really positive because there are real benefits, but of course, big risks too. And I think the biggest risks are, cybercrime. This is all over the web, so this is open potentially to crime, as with all transactions. We need to be really careful of that. And then the other, of course, is privacy. and ensuring that data isn't taken or misused in any inappropriate way. Easy to say, really difficult to do. So the Bank of England is in consultation right now.
Right.
So no decision has been firmly made, but I think it's fair to say that the industry can see the benefits. I think the House of Lords view from Parliament was, is this, a solution that doesn't have a problem? What is it we're trying to do here? And I think that's fair.
Okay.
Because this is early days. This is difficult to get your head around and to really think through in terms of all of these changes at the same time. But there's no doubt that having coded currency can help us, in my mind, to stop fraud, to track money, to take the complication, cost and inefficiencies for customers in terms of reconciling payments and invoices. Really honing in on that fraudster. You can see opportunities for central government with tax receipts, because money will be less able to be hidden in terms of offshore or other places. So you can see some phenomenal business cases, use cases where a digital currency can make such a big difference. But it takes time. It takes real understanding what it means for end consumers.
Marianne, we are running out of time. Just a word of conclusion. On my side, I mean, definitely the EU market is just booming, especially as in Europe, we still have countries where the use of cash is still predominant. So there is a huge market to be taken there in terms of digitization of payments in general. And of course, we have those fantastic tools which are PSD2 and maybe one day PSD3 and the generalization of instant payments. So we have those bricks to build the future. So maybe one last word about the next step for the UK.
Well, for me, I think it's just about collaboration. The more we talk, the more we can develop things such as the era for new retail digital currency we spoke about in the UK. So it's collaboration, a framework, with standards and regulatory involvement is essential. Economics of our payment systems and really understanding the ecosystem. And then the three things we need to watch out for are illicit use and fraud. Inclusion, there's a real opportunity here to drive inclusion at every level, and resilience. Technology is changing and it's bringing efficiency and cost savings, and getting that resilience in our payment systems, which is critical.
Great. Thank you so much for your time, Aaron, which I know is very precious. Thank you so much. And now I'm heading back to Nicolas Makel, who will conclude this session. Thank you very much.